Hey friends, hope you all are doing well. Today we are going to discuss the issue relating to the real estate sector. A person or an assessee engaged in real estate can maintain books of accounts on project completion basis as well. Now you would say that ICDS has come. Even accounting standard says that project completion method is to be followed. Yes, that is to be done if you are a contractor. But if I am constructing building and selling those building on my own, in that particular case, I am a builder. I am not a contractor, and ICDS will not be applicable. That's ICDS number 3, and accounting standard number 7 will not be applicable to me. So in the case which we are going to discuss, the assessee is a real estate developer. So he was following project completion method. In project completion method, we are aware that sales is offered to tax in the year in which project is completed. So obviously the direct expenditure will also be allowed as deduction in the year in which the project gets completed. So land cost and construction cost will be capitalized as stock in trade. You can say work in progress. Now the issue is with respect to the administrative expenditure, selling and distribution expenditure, or the case which I am referring to, that the issue was with respect to the software development expenditure, marketing and promotion expenditure. Will those expenditure be added to the cost of the project, or those expenditure will be charged to profit and loss account? So technically, when those expenditure are charged to profit and loss account, obviously my profit and loss account would have a loss normally to the tune of all this 4 expenditure, because I'm not going to offer my income to tax because my project is not complete. Whatever expenditure on land and construction I have incurred, that expenditure will be taken to the work in progress. So my P&L will be nil. But now this 4 expense which I just referred, administrative expense, marketing expense, uh, selling and distribution expenses, or you can say general expenditure or software development expense, in this particular case they would go to profit and loss account, and normally there would be a loss to that tune. So will this loss, claim of that particular loss is genuine? Should it be permitted, or it should not be permitted and it should be capitalized? That was the issue. AO took the view that it has to be capitalized and it cannot be allowed as deduction in the year in which it is incurred. Of course, assessee filed the case before the Honorable CIT appeal. Honorable CIT appeal took the view that AO has observed that there are 28 indirect expenditure charged to P&L. He led those 24 expenditure to the P&L, and the 4 expenditure which I just discussed, they were capitalized. Meaning thereby AO might be of the opinion that this expenditure do not give the benefit of an enduring nature, and hence they are required to be capitalized. So this cannot be a correct view. This expenditure are required to be charged to profit and loss account as and when they incur, because this expenditure do not relate to acquisition of an asset. Simply on the ground that the benefit of an enduring nature is available, on that particular very ground it cannot be capitalized. Those expenditure cannot be capitalized. Department challenged the matter. Matter went to Honorable ITAT Delhi. Honorable ITAT took the view that assessee has followed guidance note issued by ICAI, and as per the guidance note of ICAI, this expenditure is allowed as deduction because they do not relate into acquisition of an asset. So they are allowed as deduction in the year in which they are incurred. ITAT further went ahead and observed that what if this expenditure are not allowed? They would be capitalized and ultimately allowed in which the project gets completed. So it is not the case that this expenditure will never ever be allowed as deduction. The only dispute is with respect to the year of allowability, whether today or in the year in which the project gets completed. So if they are allowed today, let us assume for a minute, in that case, assessee will have losses. Now, if the assessee would have losses, those losses are required to be carried forward and for being set off, but then they need to be set off within a particular number of years only as per section 72. If they can't, then assessee will lose the right to claim the set off. Meaning thereby, even if I allow the benefit of set off in the current year, I allow the to charge those particular expenditure to revenue in the current year, the one who would be at disadvantageous position would be the assessee himself. So there is absolutely no problem in allowing those particular expenditure as revenue expenditure because they do not give the benefit of an enduring nature, and of course they are as per the guidance note issued by ICAI, as well as this expenditure do not relate into acquisition of any asset. Matter went to the Delhi High Court. Honorable Delhi High Court has also decided in favor of assessee. The order of CIT appeal and ITAT has been conferred. Importantly, Honorable Delhi High Court has also referred the decision of Honorable Supreme Court in the case of Excel Industries, where the Honorable Supreme Court has taken a view that when the issue is with respect to only the year of taxability of the income, and it is never a case of the revenue that this income has, it is never a case of the revenue that assessee has never claimed a particular income to be never taxable, then there will not be any major difference. There will be a minor impact on account of rate of tax, and no major impact will be there. And then in those cases, the year of taxability would only be an academic exercise, which will not be any fruitful one, and revenue should not continue with the litigation of those kind of cases. Now, please note that, of course, applying this judgment here, Honorable Delhi High Court has taken a view that this particular expenditure will be allowed as deduction because the department has never claimed that this expenditure will never be allowed as deduction. It is the dispute only with respect to the year of allowability of the expenditure. So certainly this expenditure should be allowed as deduction, and the claim of year of allowability is just an academic exercise. Revenue should not continue with that. Meaning thereby, when revenue is not at loss, revenue should not continue with the litigation. Meaning thereby, let's say I have made a payment to a related party. Let us say department says that you have made a payment at a rate much more higher than the reasonable rate. So we are going to disallow that expenditure. Now my claim is that even though I have made an expenditure, let's say at a rate higher than a reasonable rate, but the recipient has offered this income to tax, and recipient is offered to tax at the same rate at which the company or the payer is offered to tax, or the business entity is offered to taxed. So they both are taxed at the same rate. Why is a loss to the revenue? This is the judgment of, as I mentioned, this Excel Industry is the judgment of Supreme Court. An observation of Supreme Court may be in a different matter, but the observation of a Supreme Court is still having a binding effect. And in this cases, this kind of cases, this judgment can also be applied. So why did I choose this judgment of Delhi High Court? That is in the case of Somnath Developers, which we are discussing currently. The judgment of Somnath Developers, that is the decision of the Delhi High Court. I'll just give me a minute. I'll just give you the citation of that particular case. It's in the case of Somnath, as I mentioned, Somnath Developer is the judgment. The citation is ITA 494 2018 Delhi High Court, and the date of decision is 13th October 2022. Somnath Buildtech Private Limited. Sorry, I was quoting a wrong name. It is Somnath Buildtech Private Limited. Somnath Buildtech Private Limited, 13th October 2022, 494 2018 is the order. Now, the judgment which I just referred, that of Excel Industries, let me give you the citation of that judgment as well. The citation of that particular judgment is Commissioner of Income Tax versus Excel Industries Limited 2014 13 SCC 459, where this observation, as I discussed with you, that was the observation of Honorable Supreme Court, that when the dispute is only with respect to year of taxability, it is an academic exercise, and those matter, revenue should not continue with those kind of litigations. Friends, hope these videos are of some benefit and use to you. Friends, if you have any doubts, any queries, and if you wish that I should be preparing videos on those particular doubts or queries, please do share those videos, the doubts and queries. It would be a pleasure to prepare a video on those particular doubts and queries. If you have any suggestions, please do share your suggestions It would be pleasure to incorporate those suggestions as well to the extent I can. Thank you very much for giving me a great response. Thank you very much. Wishing you all a great time ahead. And please do take care of yourself.